DomaCom's approaching the what I call the 10-year overnight success, and our stars are lining up. All our products are live and operating. We've received tax rulings, and we're ready to go. We've got some key partnerships. We've got some transformational transactions. So this next 12 months, by this time next year when we speak, Leldy, it's going to be a totally different position for the company, and I'm really excited to see how it goes.
DomaCom owns and operates a fractional investment platform for SMSFs, retirees, and new home buyers. The platform allows investors to make fractional investments in a range of asset classes, including property-related investments. When a campaign is complete, DomaCom purchases the asset, places it in a sub-fund, and issues investors with units proportional to the amount they invested. These equity release products open the way for people, such as retirees, to sell a fraction of their house to investors to help them improve their retirement income. Joining me to discuss more is founder and CEO Arthur Naoumidis. Arthur, welcome to TCN TV.
It's great to be here, Leldy.
Now, DomaCom's proprietary investment platform allows investors to make fractional investments in a range of asset classes, including property. How does the platform operate, and how does DomaCom generate revenue from it?
Look, as the name suggests, fractional investing, what DomaCom sets out to do is take lumpy assets and divide them into bite-sized chunks. And there's two key components to this. The first is the technological platform, which enables investors to syndicate together to acquire an asset. The syndication is another word for crowdfunding, for example. So that's the technology layer. Then partnered with that is the legal infrastructure, which enables us to do this, and that's a registered managed investment scheme. In other words, as a retail managed fund. So that's technically how it works. Now, financially, it's quite easy. We're a fund manager, so we make money as a percentage of the assets going on. But also, we've just modified our business model to now reduce the ongoing fee. It was originally 0.88% for property. We've dropped the ongoing fee from 0.88 to 0.66 plus, but we've added a 1% upfront syndication fee. So it's one of these hairy hindsight things we should have done earlier on, which is front load some of the cash flow.
DomaCom and Tier 1 community housing provider Blue CHP recently entered into an agreement to deliver $250 million in affordable housing to essential workers in the coming year. How does DomaCom and Blue CHP make money from this housing when the essential workers living in it pay lower rents and get an ownership stake over time?
Yeah, this is the trick. It's actually very simple. So one of the things that it's taken us well over a year to do is to develop a model where we can access the low-cost government affordable housing debt. It's from a group called National Housing Investment Finance Corporation, called NIFIC. And by partnering with Blue Chip or Blue CHP, we can access this. It's about 2% loan. As you can imagine, that's really low for non-recourse loans. And that reduction in borrowing rate is passed on to the tenant in the form of a 25% reduction in rent. So that's how the tenant gets the reduction in rent. Now, how does the tenant get the equity? Well, they get the equity simply by taking a share of the developer discount. So what we've done is that we've gone to developers. They would normally pay about 10% distribution margin, and instead of paying this to some salespeople to sell their properties, they give this to the platform. And DomaCom takes some of this and gives this to the tenant in the form of equity. So the tenant gets 5% equity over 5 years. So 1% the day they move in and 1% every year afterwards. And the remaining value of the discount goes to the investor. So effectively, that's how we create the product. Now, in addition to that, we take some of the tax benefits, like affordable housing doesn't get any stamp duty, and we take some of that, goes to the investors as well. So from an investor perspective, it's very simple how they make money and why they'd get into this. They get just under about 10% price discount to get in. So that's number one. Two is they get a tenant who's also a shareholder, so much more likely to look after the property, and also vacancy risk is much likely to be lower. And then finally, they get to feel good because they're getting a teacher, a nurse, a firefighter, or a police officer, a home, and also a foot on the property ladder. That's how they make money. And DomaCom simply charges its normal fee. And so it's very, very simple. We're using, the low cost debt, and we're using tax advantages.
Now, DomaCom has been working in a partnership with a Islamic financial services group to deliver an Islamic home finance product. What tweaks are being made to DomaCom's fractional investment platform for Australian Muslims to purchase a property with leverage while still adhering to the legal structures of Islam?
Yeah, look, just as maybe some of the viewers don't know, one of the key issues for people of Islamic faith or Muslims is that they can't pay interest or receive interest. And we've been working on this for a couple of years, which is a slight tweak to our product, which enables an Islamic financier to share ownership with an investor or with a purchaser, but only receive the rent. Okay, all the capital and everything else goes to the homeowner. Mathematically, it's the same outcome as if it was debt, but there's no interest being received or paid. The Islamic financier instead receives rent, and rent is Sharia compliant. In other words, it's compliant with the Islamic faith. Now, the reason why we're doing this is that it's a very, very big opportunity. There is nothing like this in the world, we think, but definitely not in Australia. And there's 700,000 people of Islamic faith in Australia. So, it doesn't take much of that market to do very well. So that's why we've been focused on it. And hopefully very soon we'll be able to announce who our partner is. And we're very excited with this initiative going forward.
Okay, with the release of the Retirement Income Review report on the 20th of November, equity release has been identified as one of the key methods for people providing for their investment income. What does this mean for DomaCom's senior equity release product?
Well, it sort of confirms why we've spent 8 years building it. And so, we've spent 8 years building something that people thought was going to be a niche, but actually it's going to be very, very much in the mainstream. So the government is going to, we believe, and the Retirement Income Review is strongly pointing to that, to basically create mechanism for which, someone's house is going to play a larger role in funding their retirement income. So the report just simply gives confirmation of what we've been doing, but we've got to add this to what's happened in August, which is our the tax ruling that we obtained from the ATO about the downsizer contribution. So our product, the senior equity release product, is the only product that has this ruling that enables a retiree to sell a bit of their house and top up their super. In other words, adjust their personal balance sheet. So this really is, the stars are lining up for our product, and we're very excited.
And aside from the just announced Affordable Property Accelerator program and Islamic home finance product, DomaCom always seems to have other new products in the pipeline. What else is in the works product-wise?
The key thing at the moment is in the context of the pandemic, clearly unemployment, vacancy risk is one issue, and we're addressing that with our Property Accelerator, the affordable property products. But the other one is income. So at the moment, there's a lot of investors struggling to live off their term deposits, which are 1% or thereabouts. And so we're focusing on some income generating products built using our standard product. And for example, we're about to complete our first national disability insurance scheme product, which are very high, sort of 8% income yield, very attractive. We've also got wind farm co-investment. We've done our first last year with the Sapphire wind farm in northern New South Wales, where investors get 6% returns. This is where you rank ahead of equity investors who put $400 million in. So it's a very attractive returns. We've got other solar farms that are currently being structured so people are getting more attractive returns in this environment. And then finally, a pooled mortgage fund. So investors can bypass the bank and syndicate residential mortgages. So a lot of normal loan investments are more high risk end. This is low loan to value ratio, say 50% or 40%, and you're getting 4.5% income, which is pretty attractive.
Arthur, back in early September, DomaCom announced it had reached an agreement with AustAgri, where the DomaCom fund would acquire the AustAgri company. What attracted you to this deal, and what still has to be done to get it over the line?
Well, look, what attracted me to this deal is that it is transformational for the business. Effectively, we've negotiated a minimum annual fee based on a valuation of $300 million. So it will accelerate our funds under management from about 75 million to 375 million in one swoop. It will increase our cash flow from 400,000 to $3 million and take us near approaching break even. But furthermore, the whole reason for them or AustAgri wanting to come on the DomaCom platform is that they want to make subsequent transactions which will generate further fees to DomaCom, and if that occur, DomaCom will move into the profitable area. So that's why we've really been focusing on this transaction. Now, it's obviously been several months, and what are we doing? We're waiting for AustAgri to settle on their key transaction, which fingers crossed will happen sometime shortly. And as soon as that happens, we'll undertake our due diligence, and then all going well, we'll execute the transaction.
Finally, Arthur, DomaCom's funds under management rose by almost 5% on a previous period basis over the September quarter. What primes the company for further growth in funds under management over the balance of its FY21?
Look, like a lot of businesses at the start of the pandemic, everything froze. So 5% is not much, but 5% in the context of this environment, I think we're doing reasonably well. But looking forward, it's really going to be the affordable housing transaction with $250 million worth of properties that we're targeting over the next 12 months. And we've got access to $100 million worth of low-cost government debt. So we're working now on some partnerships to deliver that. Obviously, the Islamic product as well is going to be a cornerstone product that I think in 3-4 years' time will be well and truly the driver for DomaCom. And then finally, in the short to medium term, it's the AustAgri transaction, which will take us up to break even or approach to break even, if not further. So it's really going to be a exciting 12 months.
Arthur, thank you for your insights and all the best for DomaCom's year ahead.
Thanks, Laldi.
And thank you for watching. Now, if you like what you see, please be sure to like and share the video, subscribe to TCN TV and drop us a comment. Tell us who you would like to see next and what you would like me to ask them, or if you're an investor, send us an email so we can keep you in the loop with the latest ideas to empower.